everybody to today's session hosted by the Singapore Mining Club. A fantastic opportunity for us to highlight some of the very talented members that we have here in Singapore. My name is Dale Cook. I'm privileged to be the moderator for this session, and we have an amazing panel of experts across different facets of the mining and commodities industry. For those of you who don't know, the Singapore Mining Club is a preeminent networking club for mining and commodities professionals in Asia, based here in Singapore, as the name would say. It promotes the industry and connecting professionals and providing opportunities for organisations to access finance and investment worlds. Some of you may not know, the Singapore Mining Club is also committed to raising standards across the industry for continuous learning from industry leaders, and in fact, that is exactly what we're doing here now. Today, I have some very knowledgeable and interesting individuals. All of them are here in Singapore, and they provide a range of services to mining and commodities. And just an interesting fact for you all, amongst what we have here, there's well over 100 years of experience in mining and commodities in various forms. So we may not look as old as we really are. We're actually, but we are quite an experienced bunch. For everyone out there, my name's Dale Cook, and my background is that I've been involved in mining for over 20 years now, in various forms, from brownfield projects, expansions, greenfield projects, development, operations, processing, logistics, marketing, sales, commodity trading, and everything else in between. Last year, I started DB3 Advisory, which provides advisory services directly to the mining and commodities industries. And we look at finding problems that are innovative, sustainable, and resilient. These solutions that we provide actually help our clients advance and improve and maximize the value they can from the assets that they have. Well, we might get started. I was thinking we might start with what a lot of people want to know about mining is how do you actually get a project going and how does it happen? So luckily for us, we have someone here, Nick Waters, who has got a lot of that experience. So Nick, tell us a bit about yourself, and then I'm going to hit you with some tough questions. Okay, Dale, thank you.
Well, I'm an investment manager and principal at Glencore Holdings Group, which is based out of London. Glencore is a venture capital investor in the minerals processing technologies and also in mining companies and projects. Glencore holds hydrometallurgical processing technologies for base metals, including lead, nickel, zinc, and copper, and also processing technologies in strategic metals covering lithium, indium, and rare earths. We currently have investments in companies having projects of gold, lead, and rare earths in Australia, Canada, and Malaysia. By far our largest investment is in LedFX Inc., which is a Canadian company that we privatised from the Toronto Stock Exchange last year, and it holds the strategically significant Peru Station lead mine in Western Australia that we're taking into production next year as a downstream producer of refined lead ingots. I also act as the Vice President of Finance and Marketing for LedFX, having responsibility for financing of the Peru Station mine and also the marketing of lead concentrates and refined lead metal.
Fantastic. So Nick, actually, that's going to work in nicely with the question I'm going to ask you is around batteries. Today, everybody is all excited. The headline acts are the lithium and the cobalts, and you know some limelight with copper, zinc, and the technologies there, and ionic liquids. But people forget about lead. With your experience with base metals, and particularly with lead, you know, can you tell us a little bit about what are the primary uses of lead in today, and you know, looking into the future with energy storage, where does lead play a part?
Yeah, well, in terms of uses of lead and refined lead, the primary use is for the production of lead acid batteries. That accounts for about 85% of consumption of globally of refined lead product. So lead acid batteries are used in vehicles, in renewable energy storage, and in emergency power. For vehicles, lead acid batteries are used for powering cars, trucks, buses, motorbikes. And it's important to note that lead acid batteries are used not only for internal combustion engine vehicles, but also for hybrid and electric vehicles. I'll come to that a little bit later. In renewable energy storage, lead acid batteries are used for storing energy from wind and solar power generation. And in emergency power, lead acid batteries provide backup power in the case of mains failure for hospitals, emergency services, telecommunications systems, and public buildings. Lead also does have some other uses outside of lead-acid batteries. It's highly effective in radiation prevention, and that's mainly due to its extreme density. So it's used in hospitals, dental surgeries, laboratories, nuclear installations. And it's also, there are lead stabilisers which are used in PVC products. There's an example in PVC piping which protects underwater power and communications cables. In terms of the future for applications of lead in battery energy storage, I'll talk a little bit about the advantages of lead-acid batteries. They have quite a long history, going back 160 years, lead-acid battery technology. And during the last 20 years, there's been significant innovation, and that's resulted in increases in battery life of up to 35%. Lead-acid batteries are extremely reliable, and that's why they're used as a backup power of choice for those earlier installations I mentioned. In terms of sustainability, more than 99% of lead-acid batteries are recycled, and that's significantly higher than recycling rates for other batteries and battery technologies. And affordability, lead-acid batteries are the cheapest lifetime cost of all battery technologies, and they also are the safest. Some battery technologies have issues due to flammability. For example, lithium-ion batteries have to have a battery management system to prevent fires effectively. So this is an advantage which lead-acid batteries have, including in residential settings where fire safety is an issue. In terms of market share, lead-acid batteries currently account for 70% of worldwide rechargeable battery energy storage. And its key role going forward is really around in vehicles and also in renewable energy storage. So a lot of people don't know, but for electric vehicles, all electric vehicles still use lead-acid batteries, and this is critical for the running of all the electrical systems in all vehicles, including electric vehicles, such as the computers, the lights, the navigation, the air conditioning, the windows, etc. And also, lead-acid batteries is the only technology currently that's capable of meeting all of the cold cranking and performance, which is required at lower ambient temperatures. So this is an advantage, and one of the reasons why lead-acid batteries are still used in electric vehicles. Also in internal combustion engines vehicles, there's the lead-acid batteries, apart from running all the electrical systems, they enable the start-stop technology, which you see in more recent vehicles, which has significantly contributed to emissions reductions. So in terms of lead-acid battery role in the future of renewable energy storage, over the next 2 decades, global demand for electrical power is forecast to increase by about 50%. And most of this increase is forecast to come from renewable energies and from solar and wind. So as solar and wind as a proportion of the total energy mix go up, the need for these battery storage systems becomes greater, because the power is going to need to be stored and then provided and discharged when there's demand for that power, not necessarily when it's generated. So we think for these types of stationary applications where weight's not the defining factor in battery selection, that lead's forecast to have a critical, important role in future demand for battery storage.
Wow. Geez, you would think in the way the media looks at it, battery's sort of hidden away, but it's still a major player. And I do like how, from a circular economy point of view, it fits because it's so recyclable. So very interesting. Yeah. Thank you for that, Nick.
Welcome.
All right, well, I'll move along now to our next expert, and this expert's probably even more important given her role. So Vanessa is not just a risk and commodity expert with many years of experience managing risk and commodity analysis and trading, but she's also the managing director of the Singapore Mining Club. So I'll let Vanessa give herself a bit of a short introduction, and then I'll give you the question up front, Vanessa. So as the managing director of the Singapore Mining Club, can you share with us the importance of the club and what it brings to its members and what it brings to Singapore itself and the mining industry?
Hello, everyone. Thank you, Dale, for your introduction. Actually, next month will be my first birthday with the Singapore Mining Club. Briefly about myself, I've been in the mining sector for about 7 years now as an analyst for BHP, South 32 and Noble, covering base metal and steel raw materials. Prior to mining, I was in investment banking and I worked for a few major investment banks in London and across Asia. Actually, through my involvement with an investor relations startup, I've had the opportunity to learn a little bit more about the club, met the members, which kind of led me to become a little bit more active within the mining community here. And I was then asked by the president of the club to come on board to create a learning and sharing platform for our members. Coming to your question, Dale, on the Singapore Mining Club, actually, for those who are new to it, we are a networking platform for professionals in Southeast Asia within the mining and commodity space. We have over 300 members and we've put together 20 events last year. The club's purpose is to support our members' activities. Actually, all companies, large or small, across the commodity supply chain to address their challenges in areas such as fundraising, joint ventures and partnerships, commercial transactions. And we do this via hands-on peer-to-peer introductions. As a first step, we created a forum for regular networking and relationship building in the form of a monthly event. Through this, we're able to connect the Singapore's mining ecosystem regionally and globally. We've also set up the learning and sharing platform, which we intend to kick off again as soon as we get the green light from the government. We're also launching new initiatives such as this online panel discussion. We are also opening our doors to the wider community here by doing a 3-minute speed dating style video for our members. So please stay tuned for more exciting content coming your way. I would like to wrap up and reinstate our club's purpose. It is that to connect the Singapore mining and commodity ecosystem regionally and globally, and in the process to foster commercial growth for all involved. Thank you for listening. Hope I've answered your question, Dale. Thanks very much.
So I'll move right along now to our next expert, who we have here. And after you've mined the product and you've delivered it to the market, a lot of people do forget that there are still risks associated with that product. There are risks with mining itself, but we also have risks in regards to the commodity, and those risks can actually have a larger financial impact. So this is where Andrew Glass's skills come into play. Andrew has have experience across multiple commodities, and not just in mining, but also from agri. So he's got some very good inputs and information he can provide on that front. So Andrew, give us a bit of a short spiel about yourself, and then I'll hit you with some questions.
Thanks very much, mate. And thanks to the Singapore Mining Club for the opportunity to share some ideas and thinking. Some of what I see in the mining space in particular coming from other industries is that the skills are absolutely fantastic, particularly when we look at engineering and what is done at mine site. What I think often gets overlooked though is extracting the most value for the product using the tools that are available in the marketplace. I find that in the mining ecosystem, there's a feeling which is much more towards physical product and physical movement of product, whether it be logistics, whether it be digging it out of the ground. And I find that the customer interaction too, or even the supplier interaction for that matter, is quite often very transactional in nature. It's very much about moving the product, and that's first foremost, and you know, from 1 to 10, it's all 1 to 10. But there's another way of looking at this, and I think a lot of times the tools available in the marketplace, particularly when it comes to financial tools, to be integrated with physical to help manage your risks, both physical and financial, and to be able to drive solution mindset with your clients is often overlooked because it's perceived as somewhat abstract and there's a lot of fear around it. So what I do with my company is to try and help organizations demystify that, understand that it's not something to be feared, but it's something to be utilized. And it brings huge advantages both internally and for the ecosystem or your value chain to participate in. And that then creates the opportunity to move beyond the transactional to the solution, but also to differentiate your business and to become a partner with your customers. And particularly now with COVID, I think leaders in the mining industry that are willing to think differently, and if they don't have the resources in their own organization to go outside and to bring in that DNA to help understand and demystify and create the opportunity, I think they will be looked back on in, say, 10 years' time, that they're the ones that actually live the values they quite often have on the walls behind them and really did innovate to help create solutions for themselves and for their clients.
So, Andrew, your company is Avatar Commodities. Can you maybe tell us, how does a producer actually access the skills and this knowledge that you said you demystify? And tell us a little bit more about how you demystify it, and then you know, how do they use it?
Well, thanks, Dale. I mean, the first thing to understand is what the risk is in your business. Now, if you're a producer, you're trying to create a margin effectively by digging it out of the ground and selling the product. You go further down the value chain, and a steel mill, for argument's sake, if we're talking steel value chain, their responsibility is to create a margin. It's not to take a risk on the underlying product, right? Many producers will also say that their investors are particularly trying to take a position on, for example, iron ore or gold or whatever it may be. That can be true. But if they really want to do that, they can take a position on the underlying commodity anyway, right? So they want the upside of that, but they don't want the downside. So it's a bit of an asymmetrical opinion in the mind of the investor. So how do they do it? The first thing is to go through your business and understand your purpose of your business and what you're there to produce, and how your owners, now they may be private equity, it may be you're listed on an exchange, it could be private family money, right? What do they want out of it? Out of the business? What's the time horizon decision making, and how much pain are they willing to suffer in a downturn? So with that, we then work out what the risk appetite is. Then we look at the risk in the business and do they match? More than often than not, they don't match. So then we try and quantify that out, and then we go and look at the routes to market, and they can be multiples. You can look at working with your counterparty if they have access to facilities and capabilities to mitigate the risk, flexible pricing, flexible delivery. Now, you know, or you can otherwise go to an exchange, or you can also go to banks to try and mitigate some of that risk. But first and foremost is to understand, to really do an introspection, to sit back, reflect on what your business is, what you're trying to achieve, and what the risks are to being able to achieve that outcome. And from there, we build up this.
So, Andrew, that makes perfect sense to me for a business that's actually existing. But what about an investor looking to invest in a new project or the like? Can you apply this same for someone who's in that position?
Oh, absolutely. I mean, a lot of the products that are produced, if they're fungible and they've got a derivative product available to them, I mean, you can look at 2 years, for example, 3 years. You can't get, depending on what the underlying is, not necessarily more than that, but you can protect your investment by going out and buying a financial instrument to protect the product being produced from that mine site. And quite often, particularly for juniors, the investors will either do that themselves or they'll mandate that the junior goes and does that as well. But you want to be able to still enjoy upside momentum. And that's important. So there are financial structures that you can utilize to still enjoy that upside, but protect you from the downside. Particularly, you don't want to go below your cost for producing that product too. So there are ways to do that. And for investors, sometimes you'll see big funds, for example, they have an opinion on the management of a company, but they may not like the product they produce. They can buy the equity and they can strip out the underlying if they want, or vice versa if they really want. So there's a very strong ecosystem operating within the mined product space when it comes to the financial tools to support the physical market. And none of these products exist alone without supporting the physical product. It must be linked.
That's great. So I suppose sticking with that investment theme, so thank you very much, Andrew, and the work you do with Avatar Commodities. I suppose sticking with the investment theme here with you, Paul, I suppose you're very active in investing in mining companies and knowing exactly who they are and what they produce, what their underlying is and what their risks are would be critical to do this. So maybe tell us a bit about yourself and then just tell us a bit about what a generalist fund manager looks for when investing in mining.
Thanks, Dale. So I'm a portfolio manager at Fountainhead Partnerships. We're a fund licensed out of Singapore. We started in 2015. I was a co-founder of the business, and our investment mandate is to seek out secular growth opportunities. We're a long-term investor, so we position ourselves as putting capital to work over a 3 to 10 year time horizon. And then, so previous to working with Fountainhead in Singapore and setting up Fountainhead, I was an investment manager at Morgan Stanley in Australia, and focused on equities and equity derivatives. Coming from Queensland, we had a background in mining equities. So that's where we come at the mining investment side of things, but we are a generalist fund manager. So I guess from our perspective, we're really long-term investors looking for companies that can generate significant cash flow. As a generalist, but the mining investments have got to stack up with the other names that we broadly invest in across the world. So they have to stack up with all sorts of different industrials, financials, whatever it might be. But I guess for us and where we think we can add value is we're small enough and we've got patient capital to be able to allocate it towards the mid-cap and smaller cap developers of projects. So we don't necessarily have to worry about what the cash flow looks like next year. And we think as a result of that, and I guess time frame arbitrage or whatever you want to call it, we can allocate capital into very high return scenarios simply because we're patient and we've done enough work and understanding of what the development process looks like and what the cash flows are going to look like at the end of it. So we laugh that there are some assets, even if you look at the iron ore assets in the Pilbara from BHP and Rio, I mean, they've got the characteristics of LVMH handbags, but their margins are extraordinary, 60, 70, 80% in some cases with these types of projects. And we can find them from time to time across the mining suite, but they are pretty rare and you need to know what you're looking for. So I guess ideally for us, we can find a project or a company that's got the ability to generate a high return on our investment or a high margin business on the capital that they deploy. Even better, and when we get really excited is when we've got a business that's able to generate a high level of cash flow, but then reinvest it and redeploy it into whether it's an expansion or not very often an acquisition. But a lot of these projects are capital constrained at the start. So they go in, they build something, 2-3 million tonnes per annum of processing. They get the cash flow going, they pay down the debt, and then the next tranche of cash that they get to invest, we're seeing internal rates of return above 50%. And that's the sort of asset that we're trying to look for, and then be patient to be able to maintain the ownership across the first stage of investment through to then the real high returns on the further deployment of capital. So we're not looking at the 5% NPV IRR hurdles that they publish in the feasibility studies. That's not what we're interested in.
The more exciting stuff, and I suppose the hot question that everyone will want to know, what are the current preferred commodities for a new investor? And before you answer, I hope you're going to say something along the lines of lead and not lithium for Nick and lead FX comfort. But don't let me lead your question, or your answer, sorry. But hopefully you're going to go with that.
We haven't done a lot of work on lead. But I guess for us, because of the way we allocate capital, we're generally looking to put money to work in secular growth themes. And what we mean by that is essentially industries that are going to benefit over the long term from secular growth and trying to get away from secular boom bust cycles. So one of the major things that we invest in is the aging population. We've got companies that in medical devices, knee reconstructions, hip replacements, hearing aids, those types of thematics that over time, simply because of the aging population and the growing wealth in the likes of Asia, that we're going to see secular demand for those things over the next 10 to 20 years. So to try and bring that back to commodities are typically your classic cyclical investment. The one that we really see at the moment in the current environment, and it's probably an easy answer, is gold. What we've seen over the last decade, and then, I mean, it's really been accelerated just in the last 6 months, is the complete debasement of the monetary system by governments, by central banks. We call it global Japan. Every major economy is out there at the moment, or major central bank is out there at the moment, essentially printing capital and printing bonds and buying bonds, sorry, with the printed capital. So we see this over time, whether or not it's inflationary or not, it doesn't really matter. At this point in time, we're seeing a debasement of the currencies around the place, and so therefore gold should be well supported over the next decade. I think it's important to think about gold too, through the premise that if you can't make money out of a gold project at 1,750, you probably don't have a very good gold. So I'll leave the 2,000s and 10,000s to the tinfoil hat guys, but we just think that you can find some very good opportunities to deploy capital with a 1,700. We were happy with above 1,250. So that looks like it's got a secular type of return behind it if you can find the right projects. I guess the second one, and it comes back to electrification and you know, the real secular theme over the next decade, whether it's motor vehicles or the electricity grid, and copper for us is an integral part of that. Again, it's a cyclical investment typically, but the thing with copper is there hasn't been a supply response for such a long period of time. So perhaps it's not cyclical. Perhaps there's a structural growth story there now, and as demand grows over time, I'm not sure who's going to feed it. And I mean, to that point, we think this is an issue there and something that we should be allocating capital to. But at this point, we haven't actually allocated any capital to any copper projects because we simply can't find something that we're comfortable with. So yeah, gold and copper at the moment, pretty boring answers.
Not a surprise though in the current market. It's a shame about not being led, but opportunity there for Andrew though to help manage some of the risk, especially if gold's at the top and it's going to come down. But who knows? The world's been a bit crazy this year. So viewers, there you have it. Some very interesting and some incredibly talented people, all based here in Singapore, all part of the Singapore Mining Club. I mean, it's a fantastic club and you should get in and enjoy it. And if you actually need some assistance from any of these individuals, then through the club, please reach out to them. Their bios will be provided as well. And we look forward to seeing you in person at events in the future, rather than having to do them this way. But I'd just like to thank each of the panelists for their time and their efforts. And everybody stay safe, and we're looking forward to a better half to 2020. So thank you all.